Okay, let's start. Question number 9 was done, no? Last question. Last question was question number 9. Come to question number 11. Come to question number 11. Mr. Prem. Mr. Prem has following assets used for business purpose as on 1st April 2025. He has a machinery costing rupees 4 lakhs, which was used for scientific research related to business, and deduction under section 35 was allowed and claimed. Okay. This machinery he is using for his business now. So he is in his business he is using one machinery which he acquired for scientific research for 4 lakhs. For that 4 lakhs cost was allowed under section 35. He claimed also and it was allowed also. Very good. In his business he is using a laptop also, which he did not purchase. The laptop he did not purchase. The laptop which he is using in his business was received by him as a gift from his friend, and friend acquired it for 60,000. And friend purchased on 1st April 2024. And this was given to him for use in his, this was given to him and he was using this laptop for his business. A temporary wooden structure costing rupees 70,000 erected in December 2025. Now telling you to compute the depreciation allowed on these assets. Mark this question important and give me the answer. Compute the depreciation. Give me the answer. Come on. Compute. Do it fast. See what your question says. Piyush runs a sole proprietorship business and owns 4 machines which was put in use for business in March 25. Meaning last year the business were put to, these machines were put to use. Now this year, in the opening WDV, these 4 machines will come as on 1st April 2025. So in your opening WDV, these 4 machines will come. The depreciation on these machines is charged at what rate? 15%. The WDV of these machines as on 1st April 25 was 7,70,000. 2 of the old machines were sold on 15 July 25 for 10 lakhs. A second-hand plant was bought for 6,10,000 on 30th December. So first of all, he is having a sole proprietary firm. Okay. In that sole proprietary firm, opening WDV is how much? Tell me. 7,70,000. This is the opening WDV of 4 machines which were there in the block. Okay, no? So in the opening there were 4 machines and the value of those 4 machines was 7,70,000. Now in this year, did you purchase any machine? Yes. 1 second-hand plant you are buying. So one plant and machinery was acquired in this year. What was the cost? 6 lakh. But remember, it was purchased on what date? And if nothing is mentioned, it was put to use on the same date, meaning put to use for less than 180 days. So on this, half normal depreciation will be available. Okay, no? And there will be no additional depreciation. If the assessee was in the manufacturing business, still there will be no additional depreciation on this plant and machinery because this is second hand. Okay? So now tell me, how many machines are there in the block now? 5. And how much is the cost? 13,80,000. Out of this, 2 machines were sold. Old machines were sold and they were sold on 15 July for how much? 10 lakhs. After claiming this, now 3 machines are also there and 3,80,000 cost is remaining. Now can you see the cost which is remaining right now? Hello, 3,80,000 is less than the cost of the machine which was purchased in this year and put to use for less than 180 days. So on this entire value, you are supposed to claim depreciation at half rate. So into 7.5%. Tell me how much? 28,000. That will be the depreciation for this year. Understanding? So what will be the closing WDV? 3,80,000 minus 28,500 will be 3,51,500 and the block will have 3 machines. This will be closing WDV and will become opening in the next year. So you are supposed to calculate the claim of depreciation. How much is the claim of depreciation this year? 28,500. Understanding or not? Yes or no? Now tell me, they are telling you, further Mr. Piyush has furnished the following particulars relating to the payments made and expenditure incurred towards scientific research and payment made for scientific research. Yes or no? Now payment made to UV University, an approved university. So to any university which is an approved university for conducting scientific research, to that university if you are making the payment, don't you think that this will be allowed as a deduction because the university was an. And now second payment you are making, second donation you are making to Satyavati College, where it is written that it is approved college. So any donation which you are making to Satyavati College will not be eligible because it was not an approved college. College or university should be approved. Only then the deduction will be available. So for this 17 lakh there will be no deduction. So how much deduction available under section 35? If he has shifted out of the default tax regime, how much? 15 lakhs. And guys, if he was not shifting out, then He was remaining in default tax regime then that 15 lakh was also not available. Any donation for scientific research is not available. If you pay tax under the default tax regime, then that 15 lakh was also not available. Yes or no? So under section 32, how much is the depreciation? 28,500. And under section 35, how much is the deduction? 15 lakhs. Go and check the final answer. 28,500 and here it is 15 lakhs. Since it is not mentioned as an approved university, so Satyavati College is not an approved college or university, hence 17 lakh donated to it will not be allowed as a deduction. But UV University is approved university, hence the deduction is available, 15 lakhs. Will you remember this? Hello? And how to calculate this? Opening WDV, add addition, total, less, deletion, you will get depreciable value. On this depreciable value, on some value you are going to apply half rate, on the balance value you are supposed to apply full rate. But the value itself remaining is less than the value of that asset which is purchased in this year and put to use for less than 180 days. Then on the remaining value, entire value you are supposed to apply half rate. I have already told you this while explaining, and that thing is coming in the question like this. Understood? Should I move ahead? Next question, question number 12. Come to question number 12. Now see what this question number 12 says. That AB Light LLP, LLP means a firm. LLP means a firm. So there is a firm which consists of how many partners? So the name of the firm is AB Light LLP. And it has how many partners? 2 working partners, Mr. Anand and Mr. Beam, with 60% and 40% share respectively. So as per the partnership deed, what is the profit sharing ratio? 6:4, 3:2. So profit sharing ratio is PSR. Profit sharing ratio is equal to 3:2. Now see, as per the partnership deed, they are eligible for what? Interest. Interest on capital at what rate? On their capital contribution of 15 lakhs each. So partnership deed says that they should get the interest. How much interest? Full 15% will be allowed, no? Or only 12%? So 12% on 15 lakhs will be 1,80,000 each to Anand and Beam. Anand and Beam. Yes or no? So now this will be allowed. 1,80,000 will be allowed. Okay, no? And the remuneration of 50,000 per month to Anand and 40,000 per month to Beam. Oh, partnership firm, the deed is authorizing that Anand should get a remuneration of 50 and Beam should get a remuneration of 40. So tell me, how much is the actual remuneration will be given? To Anand it will be 50,000 into 12, 6 lakh will be the actual remuneration given to Anand. Okay, no? And how much is the actual remuneration which the Beam will receive? 40,000 into 12, that will be, yes or no? 4,80,000. Now tell me, what is the total remuneration? Total remuneration is 10,80,000. So remuneration received by them is 10,80,000. Out of that 10,80,000, 6 lakh is received by Anand and 4,80,000 is received by Beam. Understood? Understood? Now pay attention. Now will this 10,80,000 fully allowed? Or this will be allowed subject to maximum limit? So how much will be that maximum limit? We'll have to calculate book profit for that. And now to calculate book profit, remember what did I say? Book profit of the firm for this year. Book profit of the firm for will be net profit of the firm as per PGBP provisions, meaning all the business incomes minus all the business related expense, and it has to be calculated after depreciation and after allowable interest, but before remuneration. So you'll have to calculate the net profit of the firm now. But net profit of the firm as per PGBP provisions, meaning all business incomes minus all business expenses minus what? After depreciation. So minus depreciation, after allowable interest minus interest also, but allowable. So minus depreciation minus allowable interest. Yes or no? And after doing this, whatever remains will be the book profit. And out of that book profit for the first 6 lakh, 90% or 3 lakh, whichever is higher, and on the balance book profit you are going to calculate what? 60%. So that will give you the maximum amount of remuneration which can be given in total to both the partners, Anand and Beam. So if they are getting more than this, then limit was, for example, limit was 8 lakhs only. How much? And how much they are getting? Then how much will be allowed? Only 8 lakh. Excess will be disallowed. But what if the limit is coming 13 lakhs then? Then entire 10 lakh 80 will be allowed. 6 lakh of Anand will also be allowed, and 4 lakh 80 of Beam will also be allowed. Yes or no? And the amount which will be allowed will be taxable in the hands of Anand as his PGBP income. Amount which will be allowed will be taxable in the hands of Beam as his PGBP income. Yes or no? So now the firm is engaged in which business? Manufacturing business. During the year ended 31st March 2026, the net profit as per P&L account was 25,86,000. Very good. Now this net profit is after or before? This is before considering, meaning these items which are given below are not considered, and also before considering the interest on capital and remuneration to partner, as well as, what did I say? As well as following items. Meaning to calculate that net profit, interest deduction is not taken. So we'll have to take the interest deduction. Remuneration deduction is not taken. Thank God not taken. Anyways, we are not supposed to take the deduction for remuneration to calculate what? Book profits. And these items are also not taken as a deduction. So if the deductions are available for these items, then we are going to take the deduction for these items also. Only then the book profit will be calculated. Now see, current year revenue expenditure on scientific research, unabsorbed capital expenditure on scientific research relating to the previous year 22-23. Can I say this is not for current year, this is for previous year 22-23. Meaning that is not for current year, this is brought forward. This is brought forward unabsorbed capital expenditure on scientific research. Then you have unabsorbed depreciation for assessment year 17-18. So this is also brought forward unabsorbed depreciation. Okay, this depreciation is also not for this year. This is for the earlier years. Then current year depreciation 4,70,000 brought forward business loss of assessment year 21-22. So this business loss is also brought forward business loss, and current year capital expenditure on scientific research is given. Now, out of these items, which items you are going to reduce to calculate your book profit? Book profit for the current year. Understanding? So come to the solution. Come to the solution of this question. Come on, fast. First of all, hey, wait. In this question, you are required to compute what? You are required to compute the book profit. First of all, first you calculate the book profit. That is the important part in this question. Because we had already calculated book profit in the last lecture. But none of the question had this much complicated calculation of book profit. Okay, no? So this question becomes important because in this question you will learn that how to actually calculate the book profit. So the calculation will be made difficult like this. So first you calculate the book profit, then also the remuneration which is allowable in the hands of firm. So how much maximum remuneration the firm can claim as a deduction. If the firm is paying 10 lakh 80, so will the firm be eligible to claim 10 lakh 80? If not, then how much? So for that, you will have to first calculate the book profit, then you will have to calculate the maximum limit, and you will have to compare that 10 lakh 80 with that maximum limit. Then you will come to know that how much remuneration was actually allowable. Understanding? Then also determine the amount of remuneration taxable in the hands of Anand and Bhim. This is very important. Now how much amount out of 6 lakh will be taxable in the hands of Anand as his PGBP income? How much amount out of 4 lakh 80 will be taxable in the hands of Bhim as his PGBP income? Understanding? So now first come to the solution. See, first we are going to calculate what? Book profit. First we are going to calculate what? So, do you have profit given in the question? How much was the profit? Now we will assume as if this profit is calculated after taking all the business incomes of the firm minus all the business expenses of the firm. But this profit is before what? This profit is before interest, this profit is before remuneration, and this profit is before those items which are given in the table. Yes or no? So out of this profit, to calculate the book profit, which all things you are going to reduce? Are you going to reduce current year depreciation? How much is the current year depreciation? Check. How much is the current year depreciation? So first we are going to reduce that. Hello sir. Then are you going to reduce allowable interest? Are you going to reduce allowable interest? So how much was the interest allowable? 1 lakh 80 to Anand and 1 lakh 80 to 1 lakh 80 to Bhim. So 1 lakh 80, 1 lakh 80, 3 lakh 60. Yes or no? Now which other items are given? Which other items are given? First, table. See that table. Current year revenue expenditure on scientific research. So current year, whatever revenue expenditure on scientific research are there, has to be calculated while calculating the PGBP income. Has to be deducted. Yes or no? So revenue expenditure is how much? 2 lakh 40,000. Okay, this is 2 lakh 40. I have put a tick mark on this first. This 2 lakh 40. And what was the depreciation? Current year depreciation, sir? 4 lakh 70. Yes or no? So 4 lakh 70 was the current year depreciation. That also I am going to reduce. And 2 lakh 40,000 current year capital expenditure on scientific research, because that has to be taken as a deduction while calculating my current year's profit, book profits. I have to calculate current year book profit, yes or no? So to calculate the current year book profit, all the business incomes minus all the business expenses, yes or no? And also I have to take the deduction for depreciation, and also I have to take the deduction for allowable interest, but I don't have to take the deduction for remuneration. So remuneration I am not going to reduce. Other than that, everything I am going to reduce. Will I reduce allowable interest? Yes. How much was the allowable interest? 3 lakh 60. Will I reduce the current year scientific research expense? Yes. How much was that? 2 lakh 40. Will I reduce the current year depreciation? Yes. How much was that? And now I will reduce current year capital expenditure on scientific research also. So is there any current year capital expenditure on scientific research? Current year capital expenditure on scientific research. How much? So first you will have to do all the adjustment of the current year. First you are going to do all the adjustments of the current year. Take the allowable interest, reduce that. Then reduce the current year depreciation, reduce the current year revenue as well as capital expenditure on scientific research. So in that table, start putting the tick marks. What all things you are reducing while calculating the depreciation? What all things you are reducing? Current year depreciation, put a tick mark on that. Current year revenue expenditure, put a tick mark on that. Current year capital expenditure on scientific research, yes or no? Put a tick mark on that. Now see, now you can reduce the brought forward unabsorbed depreciation and brought forward unabsorbed capital expenditure on scientific research, because both of them are allowed as per section 32 and 35. So all the deductions available under section 32, 37(1) are to be allowed as a deduction to calculate your PGBP income, and that covers your unabsorbed capital expenditure also and unabsorbed depreciation also. But that will not cover the brought forward business losses, because brought forward business losses are not to be adjusted, are not to be considered to calculate your business profits of this year. So first, when you are calculating your business profits of this year, all the deductions available under the head PGBP, from section 30 to 37(1), all the deductions you are supposed to take. Now in those deductions, unabsorbed depreciation will also come, and unabsorbed capital expenditure will also come. Why? Because that deduction is available as per section 32(2) as well as section 35. Which are the deductions available to calculate your PGBP income? Yes or no? So first adjust all the current year items, then adjust the brought forward unabsorbed depreciation and brought forward capital expenditure. Yes or no? Adjust them. So how much will be the total now? This will be your book profit. Now one item is remaining in your table, in the question. Which item is remaining? Highlight that. While calculating the book profit, you are not going to adjust that. You are not going to adjust that business loss of earlier years. Yes or no? So note, brought forward business loss of any earlier years is not allowed to be set off while calculating the book profit. Very, very, very important thing. Yes or no? So now tell me, 10,34,000 is your book profit. Yes or no, sir? On the first 6 lakh, it will be 90% or 3 lakh, whichever is higher. So it will be 5,40,000. And on the balance amount of 4,34,000, you are going to calculate 60%. How much is that? 2,60,400. So this is the total remuneration, maximum remuneration which the firm can give to both the partners taken together. To Anand, 8,34,000, 8,400,000 separately. To Beam, 8,400,000 separately. No. So to both of them together, the maximum amount which the firm can give is how much? But how much the firm has given to both of them? 10,80,000. So will that entire 10,80,000 be available, or only 8,400,000? 8,400,000. So the firm is going to get the deduction of? Firm is going to get the deduction of 8,04,000. So actual remuneration given was 10,80,000. Maximum limit is 8,400,000. So how much is the deduction the firm will get? 8,400,000. Now this 8,400,000 will be allowed to the firm. The discussion of the firm is over. Now how much amount the partner Anand got? 6 lakh. Don't you think out of 6 lakh some amount was disallowed and some amount was allowed? And how much amount Beam got? 4,80,000. Don't you think out of that 4,80,000 also some amount will be allowed and some amount will be disallowed? Because entire 10,80,000 is not allowed out of 10,80,000. Yes or no? How much is allowed? So if I say that this is my Anand and this is my Beam, okay, no? This is Anand and this is Beam. Oh, wait, I'll write it like this. Anand here and I will write Beam here. Okay. So in the hands of Anand and Beam, how much is the actual remuneration given? Actual remuneration is given 6 lakh here, and here it was 4,80,000 it was given. So total remuneration is how much? 10,80,000. But the maximum limit is what? Maximum limit is 8,400,000. So the remuneration for both of them cannot be more than 8,400,000. So what is the remuneration allowed? What is the remuneration allowed? Allowed is 10,80,000 or 8,400,000, whichever is lower. So allowed is 400. But boss, this is for both of them taken together, no? Now out of this, how much was allowed for Anand and how much was allowed for Bhim? Because only the amount which was allowed in the hands of Anand will be taxable as his PGBP income. And only the amount which was allowed for Bhim will be taxable in the hands of Bhim as his PGBP income. Now you are supposed to split this 8,400,000 in a ratio. Because 10,80,000 is in a ratio. 10,80,000 is in what ratio? 10,80,000 is in this ratio, no? So in that same ratio you have to bifurcate this 8,400,000 also. So 8,400,000 into 600 divided by 1080. 8,400,000 into 600 divided by 1080. How much? 4,667,000. And this 8,400,000 into 480 divided by 1080. 3,55,000. 783. 733. 733. So I have divided this remuneration also in that same ratio in which the actual remuneration was given. So actual remuneration was given in what ratio? 60:48. So this remuneration will also be divided in the ratio of 60:48. Understanding? So tell me, out of 6 lakh, how much was allowed? So this amount Anand will show as his PGBP income. And out of 4,80,000, how much is allowed? 3,55,000, 733. This amount Bhim will show as his PGBP income. Understanding or not? In the exam, no, they will ask you such type of questions. That is why I told this question is important. Understood? So let's check. Please see. This remuneration which is allowed, will be divided in what ratio? In the ratio of the remuneration already given. Okay. So allowable remuneration will be allowed in the hands of each partner, in the hands of the firm. But that entire remuneration will now be split in that same ratio in the hands of partner in the same ratio in which the actual remuneration was given. So if actual was given 600 and 480, total 1080, that was in the ratio of 600 into 600 is to 480. So this allowable remuneration 8,400,000 should also be in that same ratio. Understood? Sure. So tell me, how much is allowed? This much. So now this will be treated as PGBP income in the hands of Anand, and this will be treated as PGBP income in the hands of Bhim. Firm is giving how much? 10,80,000. Entire 10,80,000 allowed in the hands of firm? No, only 8,400,000. So the balance amount which is already getting taxed in the hands of firm will not be treated as income in the hands of partner. So how much will be treated as income in the hands of partner? Only the remuneration which was allowed in the hands of firm. And how much remuneration was allowed in the hands of firm? 8,400,000. But out of that 8,400,000, how much will be the income of Anand? How much will be the income of Bhim? That you are supposed to calculate like this. And this type of question they have asked once in the exam. Will you be able to solve a question like this? Sure. Pakka, no? And please remember, while calculating book profit, you are not going to take any adjustment for business losses of earlier years. Business losses of, but you are going to settle all the current year items and also the current year, also the unabsorbed depreciation of earlier years as well as unabsorbed capital expenditure on scientific research as well as family planning. All those things you are going to adjust, because those adjustments are not as per other provisions. Those adjustments are as per the provisions of PGBP only. So you are supposed to take the deduction of all these sections starting from 30 to 37(1) while calculating your book profits. So in those sections, section 32 talks about adjustment of unabsorbed depreciation, and section 35 also talks about the adjustment of unabsorbed capital expenditure on scientific research. So as per the PGBP provision, you are supposed to calculate the profit. That is nothing but book profit. Will you remember this? Sure. How was this question? Good, no? Good question, no? Did you mark this question important? Okay. 11th question also important, 12th also important, and 13th also important. All the three questions are new questions in your study mat. This time only they have introduced. And you never know, any one of these questions can straight away come in your exam. Straight away, same question will come in the exam. And you will thank me that day. That thank God, he did the things from ICI study mat. Same question, 8 marks came in the paper. Sometimes, at least 12 to 14 marks questions are there from the study mat only. And if other questions are also made, no, what they will do? They will pick up 2-3 questions from study mat, they will mix them and create a new question. Understanding? Okay. Now tell me, how many other questions are remaining? Question number 10 is remaining, no? 8 is also remaining. So 8 and 10, 2 questions are there, okay? Let's come to the other part of the chapter now. See, how many parts this chapter has? 5 parts. First, basics. Basics will tell you which incomes are taxable under this head. Yes or no? Second part, deductions. This second part will tell you out of that business income what all things you can reduce while calculating your PGBP income. Third part is disallowances. This part will tell you which all things you cannot reduce while calculating your PGBP income. Fourth part, deemed PGBP income. Okay, no? These items are also treated as your business income only, even if you are doing that business or not. In the year in which these amounts are received, in that year these amounts are deemed to be your PGBP income, even if you are doing those business activities or not, in the year in which these amounts are received. Yes or no? Now, after section 41, after the fourth part, the last part of the chapter is miscellaneous provisions. Which provisions? Now see, in miscellaneous provisions, no, there is one section 44AA and there is one section 44AB. Apart from this, there are other sections also. There is one section 43A. Which section? 43A. Then there is 43CA. Okay. Then there will be 44AA, 44AB, then it will be 44AD, 44ADA and 44AE. And the moment we'll finish 44A, this chapter will come to an end. All the theory is done. The entire chapter is done. Now see, this 43CA, I am highlighting this. We are going to cover this under the head capital gains. When we are going to do one section over there, section 50C. So with section 50C, we are going to do this section 43CA over there. Don't worry, this will be covered. Okay, no? Now tell me, 43A we are going to do just now. Okay. Now this 43A talks about what? Foreign exchange gain or loss. Foreign exchange gain or loss. But this gain or loss will happen when you will buy the asset in foreign currency from outside India, then how that foreign exchange gain or loss will be considered under the PGBP head. Whether this will be treated as your business income, business loss, or they are going to be adjusted from the cost of the asset. So 43A says that whenever there is a foreign exchange gain or loss while purchasing an asset in foreign currency, yes or no, that gain or loss has to be adjusted from the actual cost of that asset. Cannot be treated as your business income, cannot be treated as your business expense, because this is on capital account. This is happening at the time of purchase of your asset. So this has to be adjusted out of the cost of your asset. How that adjustment and everything is going to be done, that we are going to discuss. Okay. Now 44AA talks about maintenance of books of accounts and documents. Compulsory. Now the books of accounts and documents which you have maintained are supposed to be compulsorily audited. So audit of books of accounts and documents. Why this is required, I will tell you everything. Okay. But just now, right now I am writing the heading of each section. Then 44AD will talk about computation of your PGBP income. Computation of PGBP income on what basis? Presumptive basis. What basis? This section also says this and this section also says this. 3 sections are there. In these 3 sections, a presumptive amount you calculate and show that amount only as your PGBP income. No need to calculate your income, PGBP income, by following regular provisions. At least show this much amount as your business income. We will consider this amount only as your PGBP income. Done. So requirement of maintaining the books will not arise. Requirement to get them audited will also not be arising. Yes or no? And no need to remember deduction, disallowance, this, that. Just show a flat amount, just show a minimum amount as your PGBP income. We will consider that amount only as your business income and we will charge tax on that amount. So this is given to give some, relief to small businessmen and professionals who does not want to get involved into too many calculations, too many compliances. Yes or no? So you're just growing. You have just started your business. Okay. You're just growing as a businessman or as a professional. So in the initial years, when your turnover, your gross receipts are very less, that time we don't want to put you in trouble of calculating your PGBP income, so that you will have to remember these many deductions, you will have to remember these many disallowances. Then on top of that, if you cross a certain limit, you will have to maintain the books also, you will have to get them audited also. So many compliances will be there. So we want you to stay away from these compliances if you show a minimum amount as your PGBP income. Show this much amount as your PGBP income, at least this much amount as your PGBP income, and then no need to calculate the income by following regular provision, no need to get the books of accounts audited, no need to maintain the books, and no need to get them audited also. So lot of burden, compliance burden will be released from you. Understanding? So now these 3 sections, once you understand this section properly, we are going to invest time in this section. Once you understand 44AD properly, then 44ADA and 44AE will be just a piece of cake for you. It will be very easy for you. But for that, you need to understand 44AD properly. Okay? And these 2 sections, compulsory maintenance of books of accounts and audit of those books of accounts for income tax purpose. First is the section which will tell you that you will have to compulsorily maintain the books of accounts. And second section will tell you that in what circumstances these books of accounts are compulsorily required to get audited for income tax purpose. 44AB, that is known as tax audit. And you won't believe, students, they keep these sections in option. They will read the entire PGBP properly, but these sections they are not going to do properly. And trust me, these sections, if question will come, trust me on this, that will give you cash marks, 4 to 6 mark minimum. Direct question will come, and the question will be very, very, very easy question. But for that you will have to understand these sections properly. Okay, and very easy sections you will understand also. Okay, so first section is 43A. We are going to start with 43A now. 43CA we are going to do with capital gains. Okay, and rest other sections also we are going to cover in the class right now. Okay, so pay attention. See, first of all, 43A. Now what this 43A says, that if you are an assessee, okay, you can be any person. Now you have acquired any asset. Now how will you acquire this asset? Two ways. Number one, you have acquired this asset from outside India in foreign currency, or you are going to acquire this asset by taking a foreign currency loan. Foreign currency loan. Now whenever you are going to make the payment for this or this, ultimately you are making the payment of cost of the asset, yes or no? So if you are making the payment for this or payment for this, okay, payment for this. Now you are not going to make the payment in Indian currency, you are going to make the payment in foreign currency. So right now when you are buying, at that time the foreign currency, rate of foreign currency, foreign exchange is different at the time when you are buying. So you create your liability at a different rate. And maybe the payment you are not going to do right now, the payment you are going to do after some time. So at the time of making the payment for this asset, later on, at that time, the foreign currency rates are different. And as a result of that, you might incur some gain or you might incur some loss. So at the time of payment, payment for that asset which you have purchased in foreign currency, or payment for that loan which you have taken to purchase the asset, yes or no? Loan was taken in foreign currency because you want to buy the asset from outside India in foreign currency. So you have taken a foreign currency loan. So if somebody has given you foreign currency, what they will ask from you? Indian currency? Or you will have to give them foreign currency. So for example, you have taken a foreign currency loan. So the lender will ask you to return that same amount of foreign currency, no? If you have purchased one asset in foreign currency, so the vendor will ask you to make the payment of this foreign currency only, no? Understanding? So for example, the acquisition, let's take one date, okay? Let's take one date. Date of acquisition was 15th of November 2025. Okay. On this date, you have acquired one asset. Now, what is the actual cost of that asset? Actual cost of that asset was, example, $10,000. Since you are buying an asset in foreign currency on credit from the supplier or by taking a loan in foreign currency, yes or no? So what was the cost of that asset? $10,000. Now this asset whose cost is $10,000 was acquired on what date? 15th of November 2025. Now don't you think that the date on which the asset was acquired, 15th of November 25, okay, no? The date on which the asset was acquired, 15th of November 2025, on this date, the rate of dollar to rupees, $1 was equal to rupees 85. Possible? So as on that day, as on 15th November, you will first record the asset and the liability in your books because you are buying. Now in your books, will you record it in Foreign currency or INR? Definitely. You are in India, you are going to record this asset and the liability in your books in INR. So first you will have to convert this $10,000 into INR. So on 15th of November, what did I say? On 15th of November 2025, it is the date of purchase. On this date, the dollar to rupee rate was, this is date of acquisition. On this date, the dollar to rupee rate was, $1 was rupees 85. On this date, what entry you are going to pass in your books? Come on, tell me. If you have purchased the asset from the vendor on credit, or you have purchased the asset by taking a foreign currency loan, what entry you are going to pass? Simple, asset account debit to vendor's account, creditor's account, yes or no? Or loan account. Whether you are taking the loan, then you will credit the loan account, or you are getting the credit, then creditor means vendor's account. So asset account, tell me, asset account debit to vendor's account or loan account. Now at what rate you are going to record? Are you going to record $10,000 or you will convert it into INR? $1 was 85. So how much, at how much you are going to record your asset in your books? So $1 is equal to 85. So $10,000 will be 8,50,000. So asset you recorded in your books at 8,50,000. And against that you have created a liability of 8,50,000. Yes or no? Now you are going to make the payment also, no, for this asset. Vendor has given you the credit. So are you going to make the payment to the vendor? Yes. Or you have taken the loan to buy the asset. So are you going to repay that loan also? Are you going to pay same date or after some time? So for example, you got a credit of 1 month, or you have to give the payment of the loan, repayment of the loan after 1 month. So after 1 month, which will be the date? 15th of December. So can I say the payment you are making on 15th of December 2025? And now tell me, as on this date, dollar to rupee rate will remain same or it will change? Change means it will be higher or it will be lower. It can be anything, sir. It can go up also, it can go down also. Yes or no? So let's take an example that it was rupees 90 at that time. Dollar to rupee rate increased. Or second example we are going to take, dollar to rupee rate came down and it became 80. So two examples, example A and example B. First example, dollar to rupee rate is increasing, and second, dollar to rupee rate is decreasing. So now let's see. Now on 15th of December 2025, this is the date of payment. On this date of payment, let's say dollar to rupee rate was rupees 90. Okay, no? First example, dollar date of payment, the rate of $1 is equal to 90. Now on this date, you are going to make the payment. How much payment you are going to make? No, you are going to make the payment of $10,000. Because you have taken asset worth $10,000. So vendor has given you a credit of $10,000. You are supposed to give him $10,000. Yes or no? Loan you have taken $10,000. So you are going to return how much? $10,000. So on this date you are going to pay $10,000. Per dollar is how much? So how much actually you will pay from your pocket? 9 lakh will go, only then $10,000 will come. So first you will have to buy the foreign currency. How much foreign currency you will have to buy? $10,000. To buy that $10,000, you will have to spend 9 lakh. So you will spend 9 lakh and you will get $10,000. And with that $10,000 you will settle your liability. Now tell me, at the time of payment, when the rate is 90, you are going to settle your liability. What was your liability? Vendor's account debit, loan account debit. You are going to settle it. So this will now be debited. So what will you do? vendors or loan account debit. How much? 9 lakh. Bloody, you have shown your liability at 8 lakh 50. So you'll have to settle your 8 lakh 50,000 liability, no? So it will be debited by 8 lakh 50. So it has got settled. But to settle this, how much cash went from your pocket? 9 lakhs, sir. 50,000 extra. Usually what we do in accounting? P&L account debit for foreign currency loss. Yes or no? That was 50,000. 50,000 extra you have to pay. How much cash? To cash or bank. How much? So 9 lakh you had to pay because you had to buy the dollars at what rate? 90. So 9 lakh you had to pay. You got $10,000 and you settled your liability. So now tell me, 50,000 extra went. This is because of your foreign currency fluctuation. So usually what we do in the accounting, whenever this type of loss happens, no, we debit this loss to P&L. We consider this loss as our loss, normal loss. But this loss is happening at the time of payment for the cost of the asset. So this you cannot debit to P&L, you will have to debit it to asset. You will have to add this loss as the cost of your asset. Now because of this 50,000, your asset became 50,000 costlier. Understanding? So instead of debiting this 50,000 to P&L, what are you going to do? You are supposed to debit asset account. Now, therefore, your assets in your book, which was standing at what rate? 8 lakh 50. In the cost of that asset, this 50,000 you are going to adjust. And now what is the actual cost of your asset? 9 lakh. So for the purpose of PGBP head, now the actual cost of the asset will be 9 lakh. On this you can claim depreciation. This amount you can claim under section 35. This amount you can claim under section 35 AD. So wherever the actual cost of the asset will be there, in that cost you will have to adjust the foreign currency fluctuation like this. Understanding? Now tell me, second example was 80, no? Let's take that example. So on 15th December 2025, can I say this is the date of payment? Yes or no? What is the dollar to rupees rate? $1 is equal to rupees 80. Now, tell me, what entry you are going to pass? Vendor's account or loan account debit. You have shown this amount at 8 lakh 50 in your books. So credited by 8 lakh 50, debited by 8 lakh 50. Now to pay this, how much cash you had to spend? Cash or bank will go? Only 8 lakhs. So you settled your liability. Instead of 8 lakh 50, you settled it for 8 lakh. So 50,000 gain or 50,000 loss. So usually what you do, to P&L account, and you consider this amount as gain, foreign exchange gain, amounting to 50,000. Yes or no? Instead of doing it, instead of this P&L account, credit it to asset. Your asset become cheaper by 50,000. Understood? So therefore, now at what cost your asset? What will be the actual cost of your asset? 8 lakh 50 was there, no? And there is a foreign exchange gain. So reduce that gain out of the cost of your asset. So now the cost of the asset will be 8 lakhs. Understood or not? This is your section 43A, which says that any foreign exchange gain or loss which is happening at the time of payment of what? Cost of that asset to the vendor or as a loan, whatever cost you are giving back. Yes or no? At the time of making that payment, if any foreign currency gain or loss is arising, that has to be adjusted out of the cost of the asset. Either it will increase the cost of the asset if it was a loss, and if it was a gain, it is going to reduce the cost of your asset. And that reduced cost of asset or increased cost of asset will only be considered as the actual cost of the asset for the purpose of PGBP head. Understood? Sure? Now tell me, do you have to make the payment today only? Are you going to make the payment today or after 1 month? So after 1 month the rate can be any rate, no? Now you were thinking, you were afraid that today the rate is 85. You were afraid that today the rate is 85. After 1 month the foreign currency will fluctuate too much. And what if the rate is 88? What if the rate is 90? What if the rate is 95? At that time, whatever will be the rate, at that rate I will have to make the payment. So my loss is unlimited. Loss is unlimited. Loss can be at any scale, no? Because what if that rate becomes 100 after 1 month? The rates are not in my control. So foreign currency demand and fluctuations are there. The demand and supply is there. Because of that, what if the rate increases so much that it goes to 90, 95, 100, then at that time I will have to pay huge amount, and because of that my loss will also increase. Are you afraid of that? Sure. Go to your bank and tell the bank that I want to enter into a forward contract. Which contract? What is forward contract? Right now only enter into a contract with the bank that you want to buy foreign currency on 15th December. At the time of making the payment, you would require the foreign currency. Tell the bank that you want to buy the foreign currency. Right now, no, right now you don't want to buy. Right now you are telling the bank that you are going to buy it after 1 month. So take that rate from the bank in advance right now. The bank is going to quote that rate right now only. What if the bank is saying that we will offer you $1 for 83 rupees? Sorry, what was the rate right now? 85. What is the rate right now? 85. What if the bank is saying that we are going to offer at 88 rupees? So that 88 rupees will be quoted in the forward contract. In that contract, when you will enter with the bank to buy foreign currency at a forward date, that is why this contract is known as forward contract. Now what was the forward rate fix? Come on, tell me. Let's see that the forward rate for 15th of December 2025 fixed with the bank was $1 is equal to rupees 88. Now whatever may be the actual rate, spot rate at that time, you're not supposed to worry. What if the rate later on becomes 90? What if the rate later on becomes 95? You have restricted your loss to the extent of 88. This is known as hedging. This is known as hedging. So what if the rate in the market, so actual rate, that is known as spot rate in the market on 15th of December 25 was $1 is equal to rupees 92. Will you go in the market to buy for 92? Or you will exercise this forward rate? You will go to the bank and tell the bank, give me at 88. Definitely you are not mad that you are going to go in the market to buy for 92. If you have already entered into a forward rate. So which rate you are going to apply here? 88. So how much is your loss now? Loss will be calculated by spot rate at that time or forward rate, because you have already exercised the forward contract. Yes or no? So tell me, forward contract, as per forward contract, how much you are going to pay to the bank? 8,80,000, and you will get $10,000 which will remit. So to settle your liability, how much you actually spent? 8,80,000. To settle a liability of 8,50,000, you had to spend 8 lakh 80. So your loss was only 30,000. If you would not have entered into this forward contract, you would have to pay 9 lakh 20. Your loss would have been 40,000 more, which you reduced by entering into forward rate. Understanding or not? But what if at that time the spot rate was $1 is equal to 83, only rupees 83. Tell me, now will you exercise your forward contract? It is not compulsory to exercise. Bloody, will you go to the bank to buy the dollars at 88 if the dollars are available in the market at 83? So definitely you will tell the bank, you will call the bank, bank, agreement cancelled. I don't want to buy from you at 88 because in the market it is available at. So I will buy at 83. I will buy at 83 from the market. Understanding? So how much actually I paid? 8 lakh 30 to settle my liability of 8 lakh 50. How much is the gain? 20. Understanding or not? In this case, if I will cancel my forward agreement with the bank, bank is not going to lose anything. Because whenever I'll enter into a forward contract, I will have to pay a small premium to the bank. Forward premium. That is the income of the bank, which the bank will receive to take that risk. If I actually buy at forward rate, then forward rate. Gain or loss will be calculated at forward rate. Yes or no? But if I don't buy at forward rate and I buy at spot rate, then the gain or loss has to be calculated at spot rate. Understood? This was your section 43A. This was your section 43A. Let's see. Now coming to 44AA. 43CA we are going to do with capital gains. So right now I am explaining 44AA. Very simple. See, if you are an assessee, why there is a provision, why the government wants me to maintain my books, and on top of that the government is telling me why the law wants me to maintain my books of accounts and why the law wants me to get my books of accounts audited. Can anyone tell me? Come on, tell me. If the provisions are there, no, so there has to be some logic for this provision. Why the government wants me to maintain my books of accounts and documents? Foreign currency is done. 43A is over. Now we are into new section. Think something beyond foreign currency. Come on. Are you an assessee? So 44AA says that assessee, if you are doing any business or profession, then for that business or profession, necessary books of accounts and documents, compulsory you are supposed to maintain. And in some cases, compulsory you have to get them audited also. Why the government will tell you to do that? Yes, say. No. Why they are telling you to maintain the books? Why they are telling you to get the books of accounts audited? Common sense. Are you going to tell the government that how much was your PGBP income? You will not say. You will not file your return. In your return, are you not going to tell the government that this is your PGBP income? So when you will file your return, in your return of income, are you going to show your PGBP income? How do we believe that this PGBP income which you are showing is correct? Even we will have to calculate your PGBP income to verify whether the PGBP income which you are showing is correct or not. How do we verify? We will have to calculate, no? From where we will calculate? Bloody, for that only we would require your books. And if you will not maintain your books, will we get the details of your incomes and expenses? No. Will we be able to calculate your PGBP income? No. Will we be able to verify that how much was your PGBP income correctly? No. then whatever you are going to show, we'll have to accept that only, no? And don't you think all the assessees are not honest people? There are many dishonest people. If you are earning 10 lakh rupees of PGBP income, in your return which you will file, how much you will say? Only 4 lakhs. Only 2 lakhs. Why will you try to show less PGBP income, less income? So that you don't want to pay tax, no? So the taxpayer, the assessee will always try to evade tax, avoid tax. And to do that, he will try to either suppress his incomes or increase his expenses. So whether he is showing correct incomes or not, correct expenses he is claiming or not, from where we will come to know? From his books only. And in his books only, he will record all his incomes and expenses. Checking those books only, we will come to know that, okay, this was his income, this was his expense. Income minus expense, this should be his profit. How much profit is showing? 2 lakhs. How much profit we have calculated based on his books? Oh, 6 lakh. Bloody, he is trying to fool us, showing less profits. Immediately the government can come and catch you. So to verify whether the income which you are showing taxable is correctly calculated or not, even we will have to calculate that income, no? But how do we will calculate your income? For that, we would require your books. So whenever we will have a doubt, we can immediately send you a love letter. Notice. Please come with your books. Yes or no? Books and documents. Bring this books, bring these documents. Now, looking at your books and looking at your documents, we will calculate. The income tax officer will calculate what? Your PGBP income. And now, we will see, oh, in your return, you are showing this. When we asked for your books and from your books, we calculated the income is this. Income which we are calculating based on your books is this much, and income which you are showing is this much. That means you are trying to hide us so that we can catch you. Understanding? So please maintain your books. If the provisions are not made to compulsorily maintain the books, bloody nobody will maintain the books. Have you maintained your books? Show us the books. Sorry, I forgot to maintain. If the provisions are not there, definitely you are going to give excuses. So we will make it compulsory for you to maintain the books. So that whenever we want, those books are available with you. And we can ask for those books from you. Getting my point or not? So now tell me, who will maintain the books? Who will maintain the books? Assessee, no? Now, if you will maintain the books and we will ask the books from you, don't you think you will manipulate those books? You will manipulate in the books in such a way that even if after taking your books, we will calculate the income, we will get the same income which you are showing us. Because the income which you are calculating, which we are calculating based on your books, which are maintained by you, those books will be manipulated by you. So how do we trust the books maintained by you? Till the time it is not audited by a respectable person. So get your books audited. Whenever we want, we can ask for your books, and those books should be genuine. Those books should be not manipulated. We can rely on those books. So who will give the assurance to us that your books are genuine? Your books gives a true and fair view. Who will give that assurance? A chartered accountant. So maintain your books, get them audited. Those books we can ask at any time, because based on those books only we are going to compute your income to verify whether you are showing us the correct income or not. Did you understand the logic? 44AA, 44AB? A very easy section. Now tell me, who is going to maintain the books? All assessees compulsory? No. 44AA says that all the assessees are not compulsorily required to maintain the books of accounts. We are going to tell you three types of assessees. Which assessees? The assessees who are engaged in specified professions. The assessees who are engaged in, number one, for these type of assessees, maintenance of books of accounts and documents is compulsory. Now wait, specified professions, there are total 11 professions. How many professions? 11 professions are there. So names of 11 professions are specified. All the professions? No, only 11 professions whose names are specified under section 44AA subsection 1. So in 44AA subsection 1, certain professions are specified. How many professions are specified? 11 professions are specified. Doctor, lawyer, accountant means chartered accountant, authorized representatives, yes or no? Interior decorator, likewise 11 professions, and you will have to remember these 11 names. Okay, so now tell me, see, I'll show you the names. Who is this? Legal profession. So assessee who is engaged in which profession? Meaning assessee is a lawyer. Or he is engaged in? Meaning he is a doctor. Assessee is engaged in engineering profession, meaning he is engineer. Assessee is engaged in architectural profession, meaning he is an architect. So lawyer, doctor, engineer, architect. Then accounting profession, chartered accountants. Then technical consultants. Then interior decorators. So tell me, 1, 2, 3, 4, 5, 6 and 7. And other professions which will be notified by the CBDT. And CBDT from time to time notifies, and so far CBDT has notified 4 more professions. Number 1, authorized representatives. Number 2, film artist. Film artist covers all film artists. Actor, director, producer, singer, dancer, music composer. Everyone involved in film industry is covered by this film artist. Yes or no? Then company secretary. And then IT professionals. Income tax professional? No. Information technology professionals. IT professionals. So tell me, first one, lawyer. Second one, doctor. Third one, engineer. Fourth one, architect. Next one, chartered accountant. Next one, technical consultant. Then interior decorator. 7 professions are there, and 4 professions notified by CBDT. Authorized representative, film artist, company secretary and IT professional. If you are an assessee, if you are an individual and you are doing any of these professions, so if you are an assessee, you are doing any of these professions, compulsory for this profession, separate books and documents you are going to maintain, which we are going to prescribe. So first of all, we will prescribe the documents for you, and those documents you are supposed to compulsorily maintain. Understanding? So where the documents are prescribed and what documents are prescribed. So the documents for them are prescribed in Rule 6F. So for these assessees, they must maintain the prescribed books and documents. So the assessees engaged in any of these professions has to compulsorily maintain the prescribed books and documents. And where the books and documents are prescribed? Rule 6F. Rule number 1, cash book, then journal, then ledger, then carbon copy. CC means carbon copy of the bills which you have issued to your clients. So as a professional, you are giving your services to your clients. So whatever services you are giving to your client, you might be issuing the bills, no? So original bills, you are issuing them, but the carbon copies of those bills, serially number, should be available with you. If the value of the services provided is more than 50 rupees. If the value of the services provided is more than 50 rupees. Now tell me right now, any professional who is charging 50 rupees or less for the services which he is giving. Being a chartered accountant, will you charge your clients 50 rupees or less? And if you have to do that, why would you spend 5 years in studying CA? No, after becoming a CA, I am going to charge 50 rupees or less to my clients. Hello, any doctor have you seen charging 50 rupees or less? Any lawyer? Meaning all the bills. That is why they have given the limit very less. So even if you don't remember those limits, no problem, okay? So all the bills which you have issued to your customers, your clients, carbon copies of those bills must be available with you. Serially numbered, not a single bill missing in between. Either it will be computer numbered or serially numbered, yes or no? And also this will tell us that how much income you are earning. How much income you are earning. And original bills for expenses which you have incurred in your profession. So in your profession, you are incurring the expenses also, no? For those expenses you are claiming deduction also, no? So for those expenses, you must be having original bills. Compulsory. And if for certain expenses, the bills are not available, and the amount of that expenditure is 25 rupees or less, 25 rupees or more, then for them you must be having payment vouchers. So you have made the payment for that expense, and for that, if bill is not there, original bill is not there, then at least take a voucher, signature on the voucher, and maintain that voucher, payment voucher. That is an evidence that you have made the payment for expense. Original bills must be there with you for all the expenses or even payment vouchers. All these 5 specified books and documents must be maintained by you. These are the books and documents prescribed in Rule 6F, which every profession specified here, they have to compulsorily maintain. But if you are a doctor, yes or no? 2 additional books you are supposed to maintain. 2 additional details. Number 1, daily case register and inventory register. So in your clinic, in your hospital, in your nursing home, how many cases are handled on a daily basis? Number of patients, name of the patient. You might have visited a doctor, no? Have you visited a doctor? When you go to the doctor clinic, one madam is sitting outside. Patient name. Voice is so beautiful. Huh? Patient name, address, phone number. She will take all the details. Or she will give you a form. That form you fill up. Buddy, I am dying here and you are telling me to fill up the form. Why the hell they are telling you to fill up that form? Matrimonial biodata. They are maintaining case register. Every doctor has to maintain this case register. In the case register, name of the patient, area, contact number, so that if you manipulate here, we'll come to know from the case register. Okay? And then inventory register. What type of inventory the doctor will have? Mobile phones, bottles, or he'll have the inventory of medicines. Medicines which he will use while giving the treatment to his patients. Only medicines or consumables also. Consumables means those tapes, ointment, syringes, Dettol, to do the dressing, creams, etc. are there. Yes or no? So all those items which are used while giving the treatment, like syringes and all, Ointments are there, yes or no? All those items are known as consumables. So medicines as well as consumables. For those items, the inventory will be there. So maintain an inventory register for that in the prescribed format. So format for case register is given, format for inventory register is given. In that prescribed format, you are supposed to maintain. See, these two extra details are to be maintained only by doctors. So meaning doctor will maintain only these two? No, doctor will maintain total 7. But for all the other professionals, they are going to maintain 1, 2, 3, 4, 5. So are you an assessee? Yes. Engaged in any of the specified profession? Which are the professions? 11 professions which are specified. You have to remember the names. For that profession, separately, you have to compulsorily maintain these prescribed books which are given in Rule 6F. But you are going to do it only if your gross receipts from the profession for the last 3 years, all the last 3 years was more than 1,50,000. Only then for this year, you are going to compulsorily maintain these books and documents. So for this year, a professional will have to compulsorily maintain these books and documents which are prescribed, provided in all the last 3 years, his gross receipts from this profession was more than 1,50,000. Last year, more than 1,50,000. Last to last year, more than 1,50,000. Last to last year, more than 1,50,000. So this year, compulsorily maintain these books and documents. Sir, my profession is new profession. 3 years are not over yet. This is the second year of my profession. This is the first year of my profession. Then last 3 years detail will not be available. Don't worry. Even if this year's gross receipts are likely to be more than, you are expecting means likely to be more than 1,50,000 for this year, then also compulsorily you are supposed to maintain these prescribed books. So either the gross receipt from profession in all the last 3 previous years was more than 1,50,000. Or in the case of new professions, the gross receipt from the profession in the current previous year is likely to be more than 1,50,000. So for this profession, for this year, you are supposed to compulsorily maintain these prescribed books and documents. Will you remember this? Very easy. Now you will read it once, immediately it will strike your mind. Now a small case will be made in the question. They are going to give you last 3 years gross receipts. They are going to tell Mr. Raman is a engineer, practicing engineer, or Mr. Raman is a practicing lawyer. Okay, he is into the profession of, he is into legal profession. His last 3 years gross receipt this much, this much, this much, with reference to the provisions, relevant provisions of the Income Tax Act. Please examine whether he is required to maintain the books or documents or not. If yes, then which documents? So you will have to say Raman is engaged in specified profession as per section 44AA subsection 1. His last year gross receipt this much, this much, this much. Every year gross receipt was more than 1,50,000. So in this year, Raman is compulsorily required to maintain the following books and documents prescribed in Rule 6F. 1, 2, 3, 4, 5. Don't write 6 and 7 because Raman was not a doctor. Understanding? So Raman will maintain 1, 2, 3, 4, 5. But what if in the last 3 years, any one year, the gross receipt was not more than 1,50,000? Then in the current year you will have to see whether it is likely to be more than 1,50,000 or not. Yes or no? If it is likely to be more than 1,50,000 in the current year, then also this provision will be applicable. Understanding or not? Hello, sir. So now tell me, if you are a specified professional, but you are not covered here, meaning last all the 3 years, the gross receipt was less than 1,50,000. And this year also it is not likely to be more than 1,50,000. Can it happen? How can? Bloody this year you have qualified as a chartered accountant. So last 3 years, profession was not there. So gross receipt less than 150, less than 150, less than 150. It is not more than 1,50,000 in all the 3 years. And you started your profession this year in the month of February. Just now you have started your profession. So February or March, both months taken together in this year, the gross receipt is not likely to be more than 1,50,000. So are you going to be covered by point number 1? No. Then don't worry, you will be covered by point number 2. You are also compulsorily required to maintain the books and documents. But wait, now you are not going to maintain the prescribed books. Prescribed books are only if you are covered in point number 1. But are you getting covered in point number 1? No. Last 3 years gross receipt is not there only because I have started my profession in this year. And the time when I am starting my profession is end of the year only. So last 2-3 months, I am not expecting that my receipts of the professions will be more than 1,50,000. Then why are you bothering me to maintain the prescribed books for this much small period of time? Why are you putting me in trouble? So the government says, no problem, don't maintain the prescribed books, okay? But you are also compulsorily required to maintain the books and documents, but not prescribed. Then which book should I maintain? Maintain such books. Maintain such books and documents as would enable your assessing officer to calculate your total income. But books and documents you will have to compulsorily maintain. Prescribed books are not for you. Prescribed books are for you if you are covered in point number A. But since you are not getting covered by point number A, that does not mean that you are not going to compulsorily maintain the books. You are also compulsorily supposed to maintain the books and documents for this year. But only maintain those books as would enable the assessing officer to calculate your PGBP income, calculate your total income. Yes or no? So if you are covered by point number B or you are covered by point number C, then compulsorily maintain books and documents prescribed in Rule 6F. No. But you are supposed to maintain such books and documents as would enable the assessing officer to determine the total income of the assessee. So if you are covered in point number B, you are going to maintain this. If you are covered by point number C, you are going to maintain this. No need to maintain the prescribed books and documents. That you maintain Rule 6F, books and documents, you maintain only if you are covered by point number A, point number 1. Yes or no, sir? Hello, sir. Now, are you covered by point number B? So if you are doing a specified business, if you are doing a specified profession, specified and not covered by point number A, then the assessee engaged in specified profession will be covered by point number B. And they are also supposed to compulsorily maintain the books and documents, but not the prescribed one. Now tell me, if the assessee is engaged in any business or any profession other than specified. So now you are an assessee doing any other profession, not the specified profession, but any other profession. Or you are an assessee doing any business or any profession other than specified profession. You are also supposed to compulsorily maintain by books and documents. Which books and documents? Prescribed? No. For you also, such books and documents as would enable the assessing officer to determine your total income. But when are you going to maintain these books? If you are an assessee engaged in business, or if you are an assessee engaged in any profession other than specified profession, you are supposed to compulsorily maintain these books and documents. When are you going to maintain it? If you are an individual or HUF. If you are an individual or HUF, your turnover of the business or the gross receipt of your profession in any of the last 3 years. Did I say all the 3 years? No. Any of the last 3 years, in any of the year, your turnover of the business or profession was more than 25 lakhs. Sir, my turnover in the last 3 years, all the 3 years? No. Turnover of any of the last 3 years was more than 25 lakhs. If not, then taxable PGBP income of the last 3 years, any of the last 3 years, was more than 2,50,000. So, two conditions are there. Both the conditions are to be Satisfied? No, no. Any one satisfied. Any one. And for any of the year, it is satisfied. So last 3 years, you are going to check turnover. And also check taxable PGBP income. If in any of the year, if in any of the last 3 years, your turnover was more than 25 lakhs. Or if in any of the last 3 years, your taxable PGBP income was more than 2,50,000. Then compulsory in this year, you are supposed to maintain books and documents. Sir, my business, my profession is a new business, new profession. 3 years are not yet gone. No problem, no problem. This year also, if the turnover is likely to be more than 25 lakhs, or this year also, your taxable PGBP income is likely to be more than 2,50,000, then also you are going to compulsorily maintain. Now this limit of turnover 25 lakhs will become 10 lakhs. And the limit of taxable PGBP income 2,50,000 will become 1,20,000 in the case of assessees other than individual and HUF. So if you are a company, you are a firm, compulsorily you are also supposed to maintain the books and documents if in any of the last 3 years your turnover was more than 10 lakhs. And if any of the last 3 years your taxable PGBP income was more than 1,25,000. This is in the case of old businesses, old profession. 3 years data is available, only then. But what if the 3 years data is not available? New business is there, new profession is there then? Then in the current year, if the turnover is likely to be more than 25 lakhs or 10 lakhs, as the case may be. If the taxable PGBP income of this year is likely to be more than 2,50,000 or 1,20,000, as the case may be, then compulsory for this year you are supposed to maintain the books and documents. Which one? Prescribed? No. Such books and documents as would enable your assessing officer to determine your PGBP income. Will you remember this? Sure? 44AA over. Now in 44AA, they are telling you to compulsorily maintain the books. Where will you maintain? Where will you maintain your books and documents? Come on, tell me. Usual place of business. So what is your usual place of business? The place from where you are doing your business or your profession. That is the usual place of your business, or that place where you are doing your business or profession. There you are supposed to maintain these books and documents. Yes or no? But what if you are having multiple places of business? One head office, different branches. You can have multiple places of business then. Then the principal place of your business, you are supposed to maintain these books and documents. Yes or no? And the books and documents which are maintained for this year, you will throw in the next year, no? Next to next year, you will throw. Bloody, you are not supposed to discard those books for 8 years. 8 years, how come? 6 years from the end of the assessment year. 6 years from the, so previous year, the books are being maintained. Assessment year, you are going to keep that book. But after the end of assessment year also, for the next 6 years, you are supposed to keep these books, with yourself. Because during those 6 years, whenever we can ask for your books, whenever we want, we can send you the notice during those 6 years for this year. So the book should be available with you. So you are supposed to maintain your books for how many years? 6 years. From the end of the assessment year. So 6 plus assessment year plus previous year. So previous year's books, 25, 26, will be maintained in 25, 26. Yes or no? In the assessment year also it will be required. And after the end of assessment year for another 6 years, you are supposed to keep it with yourself. Yes or no? And wait. If you fail to fulfill the provisions of 44AA, failure to comply with the provisions of, there will be a penalty under 271A, flat 25,000 rupees penalty. This is very less penalty, huh? But 25,000 is not a small amount. So all the small businessmen who are getting covered here, all the assessees who are getting covered, for them this 25,000 is a good amount. So if this 25,000 is charged, That will be a loss, penalty. So this contravention of section 44 AA will attract a penalty of 25,000 under section 271A. Flat penalty of 25,000. Yes or no? Now see, books and documents to be maintained at usual place of business. If more than one place of business, then at principal place of business for at least 6 years from the end of the relevant assessment year. This is the end of 44 AA. Now tomorrow we are going to finish this remaining part. Okay. See you all tomorrow. Bye bye. Tomorrow we are going to start with capital gains. After finishing this, we are going to start with capital gains.